All right. Good morning, everybody. Yeah, I have. Green on the screen around the world. Things are looking pretty good. Bullish exuberance on a Friday going into the weekend. We don't get that very often. Be mindful of that as we get into the later part of the day. We have OpEx today. So the market maker move won't work today. It'll show up. It'll probably be on the screen all day, but we don't know if it's accurate. We don't know if it's functioning. NASDAQ at 0.25%. Small caps up the most, more than 0.5%. A little odd to see that. Kind of goes with the trepidation of being bullish on a Friday morning and how it's just a little off, not quite right. This consumer sentiment is supposed to be the biggest event for today, other than OpEx, of course. It's a little wide. We'll see if they miss on that. The other thing that we have today that kind of stands out as something to be worried. They're talking about how the market is trying to price in 2 rate cuts this year because of the economic data that we got. That never ends well, right? When you start pricing in on the expectation that the Fed is going to cut rates, when the Fed has continued to say we're not going to cut rates until we have a reason to. And the data that we got was not enough of a reason to. The good thing is by the time we're done with lunch, we should be good into the second half of the day. So whatever we get will mostly be just from the candles themselves, unless we get some headlines that we can't anticipate at the moment. But that's any day, right? When you have to worry about headlines. But at least we know we don't have any scheduled economic events this afternoon. So at the moment, we are inside day breakout. Obviously, we're outside of Thursday's range. We have to keep it. Stay outside the box. Options level 59.50, 6,000, and then the call wall. Volume a little light on the week compared to what we've had, but still, these are back to normal numbers again, not the 200s that we were seeing. So light volume in the overnight. It's worth noting on this overnight move that we're doing it in a neat and clean and organized way. We're not outrunning VWAP like we were doing yesterday, right? When we were outrunning VWAP. Tends to get a little sketchy when we get too far away from VWAP. So it's not doing that. We still need to worry about the distance from 10, which we'll get to that in a moment. On the daily, we were talking about how we need a higher low. And that is true. We do need that high or low. But there's no criteria about when we get it. So, we had the run up and a dip and a dip. We're still looking for the next dip. We broke this level, which is good, right? So from this high to this high, wherever it happens to be a little bit higher up, it's going to be our new higher high. We still need that higher low to come in. Now, it's very likely the higher low is going to hit the 10, most certainly, maybe the 20, wherever that 20 happens to be at the time. But most certainly it'll hit the 10. And it's just a pullback, right? We're not talking about revisiting the old lows or being bearish in our bias, just a pullback along the wave on the way back up. There is something called a 5-bar rule too. It's a little odd if you get into candle counting or you've done some work with that. The 5-bar rule states that after the 5th color, the likelihood that the 6th candle will be an opposite candle color increases. And they have statistics behind it. All right, so if it's red 5 times, the odds that you'll get a green on the next bar go up exponentially. The funny thing is, if you've gone through options and you've gone through statistics and you talk about flipping a quarter, right? If you flip a quarter 5 times and you get tails 5 times, what's the odd that the next flip is going to be tails? It's not a trick question. It's 50-50. It doesn't matter that you got tails all the other times. It's a quarter, and when you flip it, you have a 50-50 shot every time. Doesn't matter how many times before, right? So when it comes to those candles, if you apply that same statistical logic, the next candle can be the next candle, because it's 50-50 chance that price goes up or down. There's the market maker move that I mentioned. It's not true. It's not real. It's because of OpEx that we're seeing it today. Unfortunately, if there actually was something that was causing a real market maker move today, we wouldn't see it, because it would be buried under the fact that it's OpEx, and we always get this signal on OpEx. We are closer to the upper edge of the ADR half than the lower, because we're up on the day more than 0.25%, but we have a long ways to go to get there. No reason to expect at this point that we're going to do it. This was supposed to be a sideways day going into the weekend, because who would really want to, pony up a lot of money right into a weekend on a big OpEx day? So the fact that we are moving to the upside argues against that and says, all right, well, they're putting money to work. That's the next level up, 59.85. I think we'll come back to this, right? That's what I call yesterday's 111, even though it can sometimes hit the 1, 2, 3, 6. The trade is still called yesterday's 111. I think that's all we're going to get, but we'll just keep working through all the data first. Today's floor pivot. So far, we have not hit it. We broke our streak of how many floor pivots we had in a row where we had not hit them. All right, so go back into earlier this week. Floor pivot that we didn't hit, and then another one, and then another one. Finally, we opened underneath one and had to run through it. So we broke our streak, but here we are again this morning with a floor pivot we haven't hit. Now, it doesn't count as an MDP today. It's a missed daily pivot. It will count on Monday if we manage to go all day without hitting this. There's an 80% chance that price will hit the floor pivot every day. That's the odds, right? So we have been in the 20 percentile. We've been avoiding it, not hitting it. If we do get back inside of Thursday's range today, that is absolutely going to be my price target. I mean, really, if we just start to flip around after the 1,236 or the 111, that's still going to be my price target. I mean, why wouldn't it be? Right? That's been we've been leaving it behind all week. I think it'd be a good target for the day. It is a wide channel. Wide channels imply that if we break out, the breakout won't stick. Well, we have already broke out, and this wide channel says that this breakout likely fails and that we come back in again. We already buzzbeat off of yesterday's high, and we've ran back up to what the Busby owes us, and that's done. But we still haven't fallen yet. We're still holding these levels. 59.50 area. There's also the concern with how far away we are from the weekly floor pivot. And I would say we've reached that level when we got to think about how far is too far. I would say that's too far. So I think we've peaked for the week. We could go a little higher than this, say on a wick, get to that 5% level. We can see we're at 4.94%. So we could go up a negligible amount and get to 5% on, say, headline news, economic data, a little bit more of a spike, and then down. Now, that doesn't mean we got to come all the way down to the floor pivot. It doesn't owe us that. This weekly floor pivot. It doesn't owe us that. Just get back inside yesterday's range. Maybe get to that intraday floor pivot. That's well within the lines of what we could do today. If we get through that floor pivot, the first support line, 58.85. And if we're looking for that spike up and something to hit along the way, 59.63. I don't think we're going to get that far. That'd be first resistance. Well, we're out of the profiles value area. And we really don't have anything up here, so we'll have to put some work in. Long ways away from the point of control. And with it being on Friday, don't have any expectations that we're really going to put any work in out here. Right? It's more likely that we hold the line or we put in some sort of distribution like this, right? Only to finish it up. So say a long tail and then a distribution right into the end of the day, only at the top side, right? It's certainly possible. What's more likely is that we break back down inside of this value area and we begin working towards this point of control, 59.11 cog line. $10-day, 30-minute volume profile and TPO. The point of control is now up here with us, but if you look at the TPO, that point of control has not yet moved. Give it time, it'll be here soon. The candles that developed this range, the volume of this area, they're all the way over here. We're not going to get to them for a long time. So we've got to wipe out all of these candles before we even get close to touching those candles to eliminate that volume. So this point of control is not going to move anytime soon. It's going to be here for nothing less than a week. At the moment, we're above it. That's awesome. It's great. We need to keep it. the concern is range. So when you get something like this, it can be a point of control, a moving average, SNR line, doesn't matter. When you've got a structure like this and you start coming back and forth above and below it, it's not supportive or resistance. It's just a zone. So then you can cross back and forth through that zone over and over again. It won't act as support or resistance until you leave the range and then try to come back into it, or you leave it too far in the other direction, try to come back into it. As long as you're just holding out around the level, it won't be support or resistance. It'll just be a zone you're building out. So if we stay in this area and build this out more, all we're doing is building out a new zone that looks like what we had down here, right? This very large zone that we had. So if we do dip down to 5,900, you know, it's not saying that we're going to be bearish or trapped underneath this or that we have to break down from there. It would just be a part of this range, much like what we had down here, right? When we were just building out that range. $59.55 is a VPOC from March 3rd. We're almost there. That's from the old contract too, by the way. It's why it's a different color. We'll see if we get anything out of it. The thing is, when you're using a VPOC, if it's on a contract that doesn't even exist anymore, there's a big argument on whether or not it has any value or weight anymore, right? We'll see. Doesn't hurt to have it on. Otherwise, we took out 5908, so that VPOC is done. It would be Wednesdays, right? And we ran through it Thursday. We did pause when we hit it yesterday, right? A very brief pause when we hit that spot. And then the move was so strong that we just ran right through it anyways, which was a pretty great tell, all things considered, of how strong that move was, that it just ran right through that. So far this morning, we don't have this point of control matching with this point of control yet. I'd expect that shortly. We do have two distributions. So we had our earlier one down here, and we built that out through most of the night. And now we've got this one where we've only been here for an hour or two, but we've already moved all of the volume up there as the point of control. Since the TPO is not up there with us, it shows that these trades were really large, that there wasn't very many trades, but there was a lot of contracts in those trades. So, you know, we can kind of take that from two different sides. One side is that there's very large positions being placed up here, maybe as a topping pattern, maybe as exiting, right? All we know is that it's a transaction up here. We don't know if they were getting in, getting out. And it was above yesterday's high. On Fridays, we get a glimpse of next week's range. It's not set in stone yet, so this is an early preview. After the market closes tonight, this thing will lock into place and then it won't move anymore. But for right now, the gray line is where price is, and the red and green lines are moving up and down as price moves up and down. And this whole thing is widening and contracting and continuing to shift. But we can use this as a preview and get a look at what they're anticipating for next week, comparing it to the week we had this week. The things that make these ranges, there's two ingredients: time and volatility. If we have a 5-day trading week this week and a 5-day trading week next week, then we have the same amount of time. That didn't change. The only other ingredient that changed to make one of these bigger than the other is volatility. Now, if this confuses you, if you don't understand where these lines come from, we just go back to where the data comes from. Come on, Thinkorswim. So we're looking at next Friday. Just scrunch this up so that you can see the numbers better. This is where that number comes from. We've got a 102 plus or minus expected move. Now into the close today after 4:15 tonight, whatever that number is, we would take that and we would add it to the close, and then we would subtract it from the close, and that would be our plus and our negative, right? The red and green line. It comes from those values. It works until it doesn't, right? We're in that environment where we've been breaking it consistently, like we did this week. We broke above it, we kept going. It said we should have had, a 100-point week, and we had nearly double whatever it said we were supposed to have. So next week is supposed to be narrower than this week, right? We can see this week's range much wider than next week's. A narrow range implies volatility is less. That's a little sneaky. If there's no big events next week, volatility would be less. That makes sense. But on the other hand, if there is something really big and the market is concerned about it, that will also show as less volatility. So that's why it's sneaky. On FOMC weeks, for an example, we often see a smaller box because FOMC is volatility suppressing. We have tick data today too, by the way. That's going to be coming in. I'm not sure when that gets released, but we do have it. It's now to get into the weeds of it, mainly, we were concerned with all these other nations in the world that the president was upsetting with his tariff talk, right? We were concerned that they would say dump our bonds, or that they would get together and somehow collaborate and hurt us through the bond market. The data that we're going to get today will go to the heart of that, and it will reaffirm the data showing that no other nations around the world are not collaborating to hurt us through our bond market. It's TIC, tick data. Treasury International Capital comes in on May 16th. This will be the data from March, which includes the foreign bond holding numbers, right? That's the numbers we're waiting on. We're not expecting that to show that any sort of adverse behavior, right? No shenanigans being happening. But it never hurts to check, right? What I say, trust but verify. We're 2.5% above the 10-day moving average, so we're still working on the decline back down. It's been a nice, smooth descent. Everything is functioning the way that it should. This is a perfect correction. We are continuing to hold the line and even, march to the upside while still keeping that distance to the 10 getting reduced every day. So, perfect example. Take a look at the weekly, and we are close to 5% above the 10-week. We got to worry about our distance from 10 and the danger that presents, the concern that we could mean revert back in the other direction simply because of how far from the 10 we are. Now it's the end of the week. The 10 will be in a new location on Monday anyways. We don't have to turn around and go back to the 10 to correct, right? All we got to do is just hold still and the 10 will come to us. It's a correction also. They're both corrections. At this point, we are extreme. And I would not expect to go more than 5% away from the 10 week without volatility also starting to rise. So we're getting into a point where we're going to start to see spot up, fall up. And it's okay, right? It's happened before. It's not a big deal, but it can perpetuate a grind higher. So if you think we've already gone far enough and we're due for a rollback, and then you try shorten it and you just get run over along with everybody else who's trying to short it, and we just keep grinding higher and higher and higher and higher. It's absolutely possible, especially when we get that far away from the 10 week. So keep your eye on the VIX. If you start to get the VIX up while we are also up, then you're in that spot up, fall up, and we could just keep right on grinding. Don't stand in front of it. You'll get run over. On the other hand, if we get the VIX rising up and the S&P starts to fall, then it's game on, right? We're going to finally get that higher low that we're looking for. The VIX is down at the moment. Miners are also down. We got some stuff in the middle that really isn't doing anything. And then we've got the things that are up. The Mag 7 and Bitcoin. Really? That's it. That's all we got. That's a sad morning. TrendSpider tends to do better than Thinkorswim when it comes to finding ETFs and such that are moving in the pre-market. So we got TLT, bonds are up a little bit, which is, it's not much of a surprise because we had that serious beat down, right? Back into that 85 level again. So bonds, banks, Bitcoin, Mag 7, healthcare only because, again, such a beat down that by reflex, it's just moving in the other direction. I wouldn't get bullish in that either. Uranium it's on the line. I know. What an amazing railroad track to the upside, right? It's absolutely beautiful. All things must end eventually. This is not what we would want to see for a bullish Friday, but the Mag 7 being up with Bitcoin is all we need for a bullish Friday. It goes to spot up, ball up theory, right? Now, we don't have spot up, ball up right now, but that's what you want to watch for, right? That's the concern. We are kind of getting to the extremes on VIX too. But I mean, we're just still not there yet. So we could break out. We could hold this breakout. Let's say it that way. We already have broke out. We can hold this breakout and we can continue to run because we have the Mag 7 and Bitcoin backing us up. But I'll keep arguing that unless we have the VIX also, then we don't have spot up, vol up. We don't have a grind that can sustain, and we have to worry about the fact that it's Friday. And why would anybody want to size up, right? CTAs, VC funds, all of them, Why would they want to size up into the weekend on OpEx weekend, no less? And we can see the VIX still just beautiful, clean move to the downside. So we got our levels. Look to get back inside of Thursday's range. Then you got our own Globex low, the midpoint of yesterday, the RTH low of yesterday. If we are going to continue to move to the upside, finish what they call what I call the 111. I'm going to measure all of yesterday just so we have the highest projection. 59.63, just round up, is the 1,236 of yesterday. That's the full move. You look at just inside 59.59. Use that until we get into the RTH today. We have enough intraday candles of our own to start measuring the intraday range. Then we won't need yesterday's range anymore. Simple enough. If we're going to see this breakout continue, watch to see if we get any other sectors that start helping us out. The ones that we need: finance, consumer discretionary, technology. So that could be the chip sector, communications, cloud services, something, right? Something that can help us out more than just the Mag 7 and Bitcoin. Then we got options flows that could come in, and or if the yields back off a little bit, right? They were getting a bit extreme with this. And then they started to back off, and that's helping us out. So we want to see that continue, but at some point, having the yields back off, if it goes too far, then it'll be just as much of a problem as when it was going too high, right? The yields need to stay in a range. So we don't want them running too far, too fast to the downside, because that'll ruin this upside move just as badly as going too far, too fast in the other direction. So keep your eye on this. I don't know, swag level 435. Still seems like a bit too much. We should be turning around here. 4.40, more than enough. This is already too much. I think it needs to pause, take a break. If the rate of change gets too fast on the 10-year on this intraday, it can break things. We don't want to see anything broke. Friday, so don't break it. Everybody be careful, be safe, have a good weekend. Keep your eye on the yields.